All right, let's talk about one of the biggest stories in the Indian market right now, the Groww IPO. This is a company that has totally changed the game for millions of investors in India. So, how did they do it? And what does it all mean for you as a potential investor? Let's get into it.
Just take a look at this number for a second. Almost 1 out of every 5 DMAT accounts in India, the accounts you need to own stocks, is with Groww. For a company that's not even a decade old, that kind of dominance is, well, it's pretty mind-blowing.
So this really brings us to the 2 huge questions we're going to tackle. First, how on earth did this fintech startup get so big so fast? And second, with an IPO just around the corner, is it actually a smart place to put your money? Let's do the homework.
To really get a handle on the investment side of things, we've got to understand the company itself. So let's hit rewind for a minute and look at the journey that took a pretty simple idea and turned it into an absolute market leader.
It all kicked off back in 2016. You had 4 guys, Lalit Keshre, Harsh Jain, Ishan Bounsal, and Neeraj Singh, who all used to work at the e-commerce giant Flipkart. They looked around and saw tech making everything easy. Shopping, booking travel, but investing? It was still a total nightmare of clunky websites and stacks of paperwork. So their big idea was simple. Make investing digital, totally transparent, and as easy as ordering a pizza online.
And you can see from this timeline, they were really methodical about it. They didn't try to build the whole empire at once. They started small with mutual funds, which was a great way to build trust with new investors. Once they had a solid user base, boom, they added stock trading. Then they layered on more complex and more profitable things like derivatives. And now they're launching their own funds and credit businesses. The goal? To become the one and only financial super app you'll ever need.
Okay, so now for the big question. How does a company that's famous for being low cost, even zero commission, turn into a money-making machine? Let's pop the hood and take a look at their profit engine.
So the secret sauce is this really clever 4-step flywheel. First, they get users in the door incredibly cheaply. Get this, over 83% of them just show up organically. Then they get them started with easy stuff like stocks or mutual funds. As you get more comfortable and your money starts to grow, they start to offer you other products, higher margin stuff like derivatives or loans. And here's the magic. Each step fuels the next one. Cheap user acquisition lets them pour money into tech, which keeps their costs super low, which allows them to grow even more. It's a brilliant self-sustaining cycle.
So that flywheel is the strategy, the how. But what about the what? Let's follow the money and see where the cash is actually coming from.
Whoa, okay. This chart tells you pretty much everything. Even though they have all these different products, a massive 85% of their revenue comes from just one place, broking and derivatives. This is their cash cow, the core engine that's powered by fees from active traders. And that's both a massive strength and maybe a hidden weakness.
And this is what happens when that engine hits full throttle. Look at this. In fiscal year 2024, the company actually lost a ton of money, mostly because they were spending heavily on marketing and tech. But just 1 year later, as the markets boomed and trading went through the roof, that spending paid off big time, leading to a crazy 1,824 crore rupee profit. It just shows you the insane leverage they have in their business model. Once their basic costs are covered, profits can just explode.
So let's zoom in on the financials for a sec. You can see their revenue more than tripled in just 2 years. Yeah, they took that big profitability hit in 24, but look at the bounce back in 25. A net margin of almost 47%. That is incredibly healthy. And that last number, return on net worth at over 37%, that's really impressive. It tells you just how efficiently they're making money with the capital they have.
All right, the growth story is amazing, no doubt about it. But, and there's always a but, right? A smart investor has to look at the other side of the story. So, it's time to talk about the risks. What could possibly knock this train off the tracks?
There are really 5 big ones to watch. First, a huge part of their growth came during a massive bull market. If the market turns sour, trading volumes could dry up fast. Second, regulators like SEBI are always changing the rules, which could squeeze their profits. Third, they're 100% digital. Any big cybersecurity issue could destroy user trust overnight. Fourth, as they get into lending, they're taking on a whole new kind of risk. What if people don't pay back their loans? And finally, the competition is absolutely brutal, with heavyweights like Zerodha and Upstocks fighting them for every single customer.
So with those challenges staring them in the face, what's the game plan? Where is the next wave of growth going to come from? Let's see what they're planning to do next.
And this is where the IPO money comes in. You can see their whole strategy laid out right here. They're not just trying to get more users, they're trying to go deeper with the ones they already have. That means pushing into new areas like credit, building fancy new products for wealthier clients, and even using some of that cash to buy other companies to speed things up.
Okay, so let's bring it all together. We've seen the incredible growth, the powerful profit machine, the very real risks, and the clear path for future expansion. This all leads us back to the main event. Should you invest? Let's put the bull case and the bear case side by side.
It really boils down to this. On one hand, the bull case is simple. You've got a market-dominant company that's wildly profitable, grows efficiently, and has a solid plan for the future. But the bear case is just as strong. This is a business that's super dependent on the mood of the market, faces fierce competition, and has regulators watching its every move.
And it all comes down to this one central question. Can a company that built its empire on being simple and cheap keep up this insane growth as the market gets tougher and the rules get tighter? That really is the billion-dollar question for anyone thinking of investing.
Grow's true genius was taking something incredibly complex, investing your hard-earned money, and making it feel dead simple. But the irony is, the decision to invest in Groww itself, well, that's anything but simple. It's a real choice between a proven high-octane growth story and the very real risks that come along for the ride. The simplicity of their app doesn't mean this is a simple investment.